Hello, my name is Duncan Craib. I'm the CEO and Managing Director of Boss Energy. Boss Energy is a uranium explorer and producer. We have 100% ownership of the Honeymoon uranium mine in South Australia. We also have a 30% holding in the Alta Mesa project in South Texas. And in addition, recently we've acquired 18.4% of Laramide Resources. So all combined, we're a multinational company that's producing uranium in a few tier one jurisdictions.
Duncan, good to see you, sir. Interesting times out there, and I guess today I would love to speak to you about how companies like yourselves approach it. And I think you've kind of partially answered that with the acquisition of this 18.4% in Laramide Resources. So what did you see in them that you felt you needed?
Oh, Matt, thanks. I've been looking at Laramide for many years. We think particularly their flagship resource called Westmoreland in Queensland is a fantastic asset. It's nearly 70 million pounds of inferred and indicated resource, but really in a jurisdiction that hosts large ore bodies. So we just see it's a bit of a long-dated proposition in the sense that Queensland currently has a moratorium on uranium mining. But we believe if a credible party comes forward and we can support that process, that the government will overturn that decision in due time. So what we saw was an opportunity. We see that your equity prices are currently down in the environment. We're fortunate. Boss Energy's got a strong balance sheet, almost $250,000 Australian dollars, no debt. We're producing cash flow. So it just seemed to me that there was an opportune time to make this strategic move. And yeah, having watched it and over the years, it really was a good feeling, satisfying.
Okay, well let's help people because I think a lot of people won't understand the kind of politics in Australia, let alone Queensland at the moment. We're talking about the moratorium has been in place a while. Labor government in place over the past few years has been talking sort of anti-nuclear stance. So why do you think there could be change?
It's really South Australia and Northern Territory are the really only two states in Australia that support uranium mining. In fact, South Australia's got 3 producing mines. But Queensland and Western Australia are under these moratoriums, which is a great pity because both states have these significant resources that could be developed. Queensland is attractive to us. The new Premier representing the Liberal National Party or combined coalition, Premier Christodoulou, he was actually previously the Minister for Mines and Energy within that state when they were last in power. So, and during that time, he actually lifted the moratorium in the state for uranium mining. And there's historically been uranium mining in Queensland. The problem was when he lifted the moratorium, he was attacked by Greens and activists. And then a lot of the developers who said they would have progressed their projects and brought them into production, none did. So this time round, he simply said, look, I'm not going to push the agenda unless there is a credible party that comes forward with a proven track record of production. And that's, I believe, where Boss can play a significant role given our success with Honeymoon.
Right, and what can you do actively to either help understanding or kind of push that forward in any way? We've had people like Jonathan Fisher on here explaining sort of the Australian politics of the moment and this sort of I guess renaissance in thinking around nuclear, a solution to the energy issues in Australia. Do you want to get active there, or is it kind of sit back and wait and see?
It is so important desensitising the Australian public or helping them increase their awareness. I still actively campaign with Jonathan Fisher. Through the Mineral Council of Australia and the Uranium Forum, we're active for the benefit of the whole of Australia. But in particular with Queensland, I just think if we can promote what Honeymoon has achieved in terms of now paying royalties, paying taxes, employing people, just showing the actual material cash flow benefits for a producing mine and really talking at that level, I think that's probably more suited for the company and for me. Playing an activist political role isn't really something that I lean towards, but certainly having those mature conversations with politicians, it does appeal to me in terms of what economic benefits it can derive. And this is at a time that, Queensland, Australia, we are weaning ourselves slowly off fossil fuels. So here's another alternative to move that workforce into uranium mining.
Right. Okay. And if I look at obviously Westmoreland, £48 million, it's a decent sized resource at the moment. But Laramide has a bunch of other assets as well. Obviously the assets in the US. I think it's Crown Point, Church Rock, and LaSalle, Alta Mesa, etc. How are you looking at those portfolio assets? I'm particularly interested in what they've done recently in Kazakhstan as well. I think that's
Kazakhstan's really interesting, and it's a jurisdiction that I'm not as familiar with in terms of operating, but yeah, it's an interesting exploration play and how they're going about that. So watching that, but New Mexico is of interest, and I mean, to me, I saw today's news that Encore Energy have spun out their New Mexican assets into a separate vehicle. To me, it makes sense that you'd put the Laramide assets into that vehicle as well, but that's me. So I think there is, I think consolidation and synergies within states and close by tenements should be working together. In fact, I think it's Crown Point, but there's some element of joint venture synergies between Encore and Laramide at the moment, so it would make sense in my mind to put the two together.
Right, and I think now's a great time to talk about Encore. Okay, so Encore, Alta Mesa project in New Mexico, but I think there's also discussion from them about another very large asset in New Mexico. New Mexico seems to be the place, one of the states to be at the moment. How much influence do you have? And 18.4% influence, but how much influence do you have with Laramide in terms of maybe trying to create something bigger down in New Mexico?
I haven't had those discussions with Laramide CEO Mark Henderson. At the moment, we really are a supportive shareholder. We haven't gone hostile. We've acquired, in fact, it's now 18.8% of that company. We're there to support, but really, in our mind or my mind, I just think more proactively can be done on the assets such as Westmoreland or the New Mexican assets. And I just feel that, even if the market does have a bit of a soft patch like we're in now, it doesn't mean you stop work. I mean, we progressed Honeymoon when the spot price was 18 to 24 US per pound for a few years. So we need to keep that technical work, the drilling work. They have been doing that. I think more can be done. So it's more being a proactive, supportive partner in that process.
Right. Okay. Let's get on to Encore. Obviously, Encore, a few ripples recently at PDAC. We've seen the CEO leave. Not quite sure what happened there. How does that affect your thinking with regards to your share in that company? What can you tell us?
Our shareholding or our financial investment was really at an asset level, and that's their flagship mine, Alta Mesa. So, before entering into that transaction, we did a lot of due diligence and gained a lot of comfort over that resource and over the processing plant, and thought this is a really sensible investment. It's in a great jurisdiction of South Texas, which is pro-uranium mining. And the history of Alta Mesa speaks for itself and what can be achieved. So we gained a lot of comfort for that. And we also recognised as, a lot of Australian companies get big and ambitious, and mining companies that is, and they venture off into North America, but it's proven to be a graveyard for many Australian companies. Policies and procedures and cultures may not fit or may not understand the jurisdiction. So for us, our 30% investment into Alta Mesa was a stepping stone to gain knowledge and understanding. But I mean, it's fair to say we've been really impressed by everyone on the ground in the team there. And we still very much respect Paul Goringson, as we do too with the current board and the executive team. So I think, that they've had a few, I don't know the more general view of the company taking a view with and why the CEO left as such. We're really focused on Alta Mesa, and as their management and board, that's for their decision. But yeah, we remain very much supportive investors in that project. And I mean, to that effect, even sharing IP and knowledge, and we're very much involved in the budgeting process and financial support, and we're delighted to now be getting product from that mine to sell into our own sales book. But yeah, where we can lend assistance going forward in terms of geological or hydrogeology with the in situ recovery method or even ion exchange, we will. So yeah, it's a terrific asset, and I'm sure, when the dust settles, it'll do well.
Right. Okay. Like, I mean, at the heart of this was missing targets, and it goes to the point which I talk about a lot, which is this is harder than people recognize, and I think a lot of companies claiming to be able to kind of get into production where it'll be a well, just show me, don't tell me exercise. And in this instance, do we understand why the targets were not met?
Yeah, I mean, it's largely, certainly in the second half of last year, calendar year, the availability of drill rigs was quite scarce, and one needs drill rigs. I think they managed to get 8 drill rigs operating, but one needs more on Alta Mesa, more rigs to actually keep developing well fields. And why that's the case is some of the well field tenures sort of last, or recoverability curves last for about 4 months, then a new well field needs to come on. So you're constantly trying to build well fields ahead of schedule, almost 6 months, 12 months ahead, and it's an ongoing process. So with these mines, you get your processing plant up and running, and then you become almost like a well field construction company. You're really focused on that aspect. So they may have fallen a bit behind in that regard. Certainly the grades they're getting from the well fields are terrific, and the recoverability has been terrific, but yeah, you need to keep building well fields to keep feeding the processing plant to increase your production profile. Honeymoon's the same. The only difference is at the moment, we've got longer lasting well fields. Our well field we can establish, and they're operating for over 12 months. So we're a bit more similar to, or Kazakhstan's even better than that. So it really just varies in the area. So I think Encore, I'm talking Alta Mesa. I don't know about Rosita and the other projects, but Alta Mesa, they could have just done with a few more drill rigs, which they now have secured.
Right. And I guess operationally, you got a question. Well, 2 things. One, why wasn't that identified and signaled earlier, and then also communicated to the market that perhaps these problems are coming down the line? It kind of felt all a little bit last minute. I appreciate it's another company, but you are 30% shareholder, so would you expect that things to improve on that front?
I think, I mean, yeah, we were a bit surprised by, I guess, with the new sort of regulatory filings on NASDAQ sort of brought to light some of the factual, I guess, ramp up of that mine and how well it's going. So, yeah, there are a few areas that we are sort of looking more closely into as to why it wasn't, the production profile was where it was meant to be. But I mean, it's important to bear in mind, we're also, I guess you're a bit forgiving and conscious that this is a mine that's going through a ramp up, similar to Honeymoon. It's not plain sailing. You don't just switch these plants on and it works day one. So, there's a bit of discretion as well to say, okay, they are ramping up. They are, I mean, as we saw in last week's announcement, they've turned the second ion exchange circuits now in production, the third one due by the end of this calendar year. So things are moving along, okay, not as fast as we would hope, but they are positively moving forward. So yeah, there's a bit of a light touch perhaps, certainly as respectful JV and smaller JV partners are, but yeah, their communication to the market, I'm not as, it's really at their discretion in a lot of shape or form. However, I've been notified that under continuous disclosure, we too have our own responsibility and our own view as to what that is and have to disclose that to the ASX. So,
right,
yeah.
okay. Yeah, I think that, well, it makes sense for all companies to be clearer and, maybe signal to the market a bit earlier. It might also, help with the type of response. I mean, the market responded very, very negatively to not just that, but perhaps the whole handling of that process. And we will speak to the company another time to try and get to the bottom of that.
It does sort of bring into focus too, and a lot of uranium companies. I mean, we learnt the last time in the last cycle, but it still plays out today. When one gets the companies off the ground and prices are running and you enter into contracts, sometimes to secure debt, other times to say, okay, we're going to need that cash flow coming in at this period of time. Companies can sometimes overcommit or enter into contracts, and if your production profile is not there to feed into those contracts, it then has that other negative effect that one then has to go into the open market and buy material to sell into those contracts. So yeah, it's a really tricky game starting a uranium mine. Contracts being, sometimes for 4 or 5 or 7 years of duration, and you're forward looking and saying, we're confident with our mine, but gosh, 7 years from now, we believe it's going to work, and you work on that assumption. But yeah, that's a really challenging part of the business, and one that we all spend a lot of time analysing and strategizing about.
Yeah, look, and I think in this instance, there was that need to kind of go out and buy in the open market at significantly more than perhaps they're able to sell it for. So the knock-on effect was, twice, if not three times amplified as a result. So, but look, I guess lessons to be learned, and we'll speak to the company ourselves. Don't need you to comment, and probably would be indiscreet of you to comment on another company's workings. Let's talk about things like the third circuit. You talk about that coming online at the end of this year. Sorry, end of 2026. Is that right? Was it 2026?
Yeah. So the second ion exchange circuit's now in production, which is terrific because it can handle more flow and increase the actual production, the throughput. And then the third column, our third ion exchange circuit, comes into production at the end of this calendar year.
Oh, 25. Okay, interesting.
Yeah.
And these are exactly, so there's no sort of difference in these ion exchange circuits. So you've done it twice. You should now know how to put it in efficiently. So one would expect that to go in without much.
Fairly smoothly. It'll be the same operators who are bringing them back on, and yeah, it's a known process. And as mentioned, like the plants work historically, and they're just bringing it back online. So yeah, in terms of a new plant startup or mine startup, it's a lower risk than a new construction, for example.
Right, and that sort of takes them up to about £1.5 million of U3O8. Is that right?
That's correct. It'll ramp up to nameplate of 1.5 million.
Yeah.
And from there, our percentage, 30%, we'll get 30% of that production, which we can sell into our own sales mix. So we independently control that finished good. Once it gets transferred to our account, we then sell it into our own contracts or however we choose to do so.
Good. We're getting into an area which I think really, really matters at the moment, which is actual supply. Like I've said many times on many shows, I think demand, if it stopped tomorrow and it's settled at these rates, we're fine. Okay, demand good, but that part of the equation understood. The supply stuff is this things that worries me. I'm not sure everyone who's claiming to be able to get into production by the time in the time frame they're suggesting will do, and I think that's a real opportunity and it's a real concern in equal measure. So just sticking with the with this third circuit, etc. Is it an option is that at nameplate, or would you expect to see improvement, say to maybe £2 million from that, or could you add a fourth circuit? How does it work?
Yes, you can. You can increase the size of the plant, but those three circuits will take Alta Mesa up to £1.5 million. They do have a license to go to £2 million per annum, so there is that opportunity. I'm not sure what further engineering designs are needed. If I can switch back to Honeymoon, I know it's a similar position. We have a license. Our nameplate's £2.45 million. We've got a federal endorsed government permit to go up to £3.3 million. But if we wanted to go up, we'd have to add another 2 ion exchange columns to our current 6, and would have to increase the precipitation circuit and add another kiln to the drying and packing area. So one can expand these plants, and the nice thing with ion exchange is it simply is adding another IX circuit or adding another column. It's sort of like a bolt-on type system that it runs in batches. You can turn them off equally if you need to. So yeah, I'm sure they've got the capability to do so if they find the resource.
Right. Okay. Let's bounce back into the core Boss Energy business, which is trying to understand what supply looks like for you in 2025, 26 and beyond. Obviously, with 30% ownership of the production out of Alta Mesa. Well, I'm going to assume £500,000. What's that do for you in total production terms for the company?
No, it's great. I mean, what we're looking at now is that the guidance that we've provided to market in terms of production is to achieve £850,000 by June this year, and we're comfortable that we're going to get that, if not more. And then on to £1.6 million in June 26, and then on to the 2.45. So it's a gradual ramp up, which was planned, and that's largely predicated, similar to Alta Mesa, ISR mines gradually ramp up because you need to bring new well fields into operation, and it's simply not feasible when you've raised your capex to build your processing plant or make technical advancements. You raise enough capital or enough debt to do that, start the process, and then you further build your mining process. And that's that's the reason why these mines take longer to ramp up than a typical convention mine or conventional open pit type operation. So yeah, we're ramping up. It's basically a 3-year ramp up. We're going really well. Our month of February production, for example, was more than the December quarter. So quarter by quarter, we're almost doubling our production. And so, yeah, very, very happy in that regard. And the plant's working very well. I mean, the tenor of uranium that we're getting from the well fields is higher than what we had forecast. The lifespan of the well field, only the first two, seems to be longer than what we had forecast. And then in terms of the processing plant, having adopted ion exchange technology, the resins that we use within those columns, the loading of those resins and the durability or the lifespan of those resins have exceeded our expectations as well. So we're off to a good start, and I hope it continues, but so far so good. And yeah, I guess and the workforce is settling down. So by all accounts, if we ramp up steadily and Alta Mesa ramps up steadily, you're looking comfortably at a 2 million plus producer with the ability to expand it even more. So yeah, it's a good starting point.
It's a good starting point, and you kind of got the building blocks in place. So obviously, with your own project Honeymoon, your share of Alta Mesa, and obviously this recent investment into 18.8% of Laramide. You're trying to build something which you think will work in a market like we're seeing. Now, as I alluded to right at the beginning, it's a funny time for uranium at the moment. It seems to sort of have kind of reset off of the highs of the end of, beginning of 2024. Spot prices down. A lot of the kind of key drivers, I think, are opaque at best. Why do you think building up this international organization is going to be better than maybe focusing on your own kind of core business? What's it doing for you?
Yeah, I mean, the only reason why, for example, we looked at Laramide or executed on Laramide is because we're confident with Honeymoon. Like, we are confident that the mine is ramping up to plan. So it kind of gives you that a flexibility to then think, okay, what's going to happen in years 8 from now, or what's happening in the future? What are we planning for? And to get a foothold on a project or a company that has these viable projects, even though they're a bit more long dated, I think in the current market was an opportune time. I mean, I think it was a savvy buy at a good price, and there's potential to go more. So that's what boded well. Our balance sheet's still strong. I mean, we've still got $250 million Australian dollars worth of liquid assets. There's no debt in the company, and by the end of the June quarter this year, we aim to be, net positive cash flow in production. So it's quite a enviable place. And even if the spot price is $65 a pound, being an ISR miner, you do have the advantage of cheaper mining process. So we announced with the January quarter C1 costs of $23 to $25 a pound. We're still tracking along that. So, this is a company that, while the current pricing may be inhibiting other projects from coming into production or deferring their FIDs, or, we've seen the likes of regulatory commentary in Canada with Denison and NextGen. all the meanwhile, it sort of pushes that demand supply deficit out even further. And I think there's an opportunity for Boss. So, we're there. We've got that first mover advantage. We can, while we've made it's not a big outflow to get that percentage in Laramide, but it's a strategic one. And similarly with Alta Mesa. So now we look further afield. But yeah, I think we've discussed before, it's really, we find it really hard finding viable assets and what can come into production, and we're producers. And if we go along another route and say, okay, let's just buy pounds in the ground for the sake of it, I'm going to lose my team. They want to produce, and that's the key. So for us, we want to be in production.
That's a fascinating point you make there, because we've seen lots of different business models in the past, and more recently, and I look to Deep Yellow, for instance. They're saying, okay, forget it, we're not incentivized, and a lot of CEOs say we're not incentivized at these prices. We need higher uranium. Forget it. And if they're not incentivized, if they're not getting their term contracts, they're not getting the funding in place to build this thing anyway, even if they wanted to. So there's a slew of developers who won't be producing within the time frame that they've set. We've seen some models like the UECs, like the Denisons, who have been through an M&A process in the last 3 or 4 years, building up the portfolio, and as a consequence, getting rewarded by the market, and therefore being able to raise even more money to continue this rollout. But they're not focused on production. Denison, I think, are hoping that they can get through a panel process and maybe get one of the assets into production. UEC have produced a whole drum of yellow cake at the moment. It's not exactly awe-inspiring as an investor to sort of see the market in the space it's in now. How do you, as a producer, take advantage of that? Is it through more M&A?
I think if the prices are suppressed, then there's value accretive acquisitions to make, where we believe that the deposit, and it may not even be a big deposit, but where that deposit, it can economically be viable to produce, we'll look at it. And clearly we don't want to stretch our team too far, and you need to focus on your flagship mines, call it Honeymoon, and for Encore, Alta Mesa. I mean, without that flagship mine operating as you want it to, you lose your pillar for any growth. So that's really the focus at the moment. But we've been very strict to date. There have been opportunities in the past that colleagues have acquired that we thought weren't viable. We've been disciplined, but now we can have that that ability to expand. And I think in the current market, UEC is quite a classic. They're selling some of their strategic inventory, but they may have entered into forward contracts to balance that. I'm not sure how they manage their book, but at some point, if you've got those overheads and those tenements, and to keep those tenements alive, you need to go into production. So in the absence of, maybe now, if we've got a strong cash inflow with Honeymoon and Alta Mesa, other companies are unable to get off the ground, they need financial support, maybe there's opportunity there for M&A, and we can look to consolidate. We're big believers in consolidation, particularly lowering corporate overhead and synergizing operations. I think there's so many small uranium operators. If we all team together, and ultimately there are no egos in the room. If I shouldn't be here, I won't be here. There's a better person to fill the position, so be it. But we should start synergizing. Yep, and combining.
Yeah. Well, yeah, it seems eminently sensible. And I guess people are sort of drawn very much to the North American market, because we've seen Russia, China, Kazatomprom in Kazakhstan obviously come together, and all that production looks like it's heading east. You've got a lot of difficulties in Africa at the moment, it seems, with Niger, a little challenging environment, and perhaps with the Namibian plays, they're just waiting for that kind of, again, price incentivization to kind of move things forward. So moving forward cautiously. Love Namibia, by the way. That's not an anti-Namibia thing. But the North American market, people are looking to, and we're seeing lots of sort of like, £200,000 production here, 500,000 here. It doesn't add up to a whole bunch. And in a kind of geopolitical and regulatory environment like we're seeing in the US, perhaps opening up to mining and definitely wanting increased energy output. Does nuclear still have a role to play? Is it in danger of, I guess, endangering itself if it doesn't get its act together? And again, how do you play into that?
Yeah, I think it is endangering itself. I've always been a strong believer that the industry should be looking after the producers and helping the producers come into production. And again, like uranium itself is what 8 to 10% of a nuclear power plant's OPEX, its operating expenditure. So they can afford a higher incentive price, and a higher incentive price is needed to help other development projects come on. So my longer term, my bigger overall view is US, for example, nuclear accounts, nuclear power is about 17, I think it's 13, 17% of its energy needs, and it's baseload, dependable 24/7 power supply. So it's part of the energy mix that's needed in a dependable grid. So I do think nuclear's got a good future to look forward to, and I really, there's enough uranium in the world, it just needs a higher incentivized price to mine it. So yeah, it's really up to the industry now to focus and to support that. A bit worried with that sort of the IRA Act sort of being repealed or frozen. Some funding of that was going towards nuclear utilities in the US, and they'd probably be a bit concerned as to whether that funding's still coming or not. Does that put on hold some of their expansion plans? Ultimately, a nuclear power plant's competing with other providers of energy, so they have to be cost competitive. So, yeah, look, I agree with you, Matt, on many levels on this. I just feel that I've always been optimistic that energy is required and nuclear's got a place to stay. But I do wish that governments and industry, particularly utilities, supported the producer more.
Right. No, I'm saying I think the other well, if you don't mind, I've got a few minutes. There's other conversations going on. People are sort of a little bit unsure about that. They're unsure about, obviously, with the Kazakh ANU shutting down. You've got structures like Sprott, the Sprott Physical Uranium Trust, and Yellowcake here in London. They seem paralysed just by the nature of the structure. They're not buying the pounds they once were. There's talk of maybe do they sort of dump stock into market? What would that do for spot price? Traders playing their game that they in the way that they do.
The spot commodity trades. No.
Absolutely. There's a lot of moving parts, as I discovered with a chat with Dustin Gower the other day. A lot of moving parts which are kind of out of control here, and they oft discussed supply demand gap and price incentives and spot versus trade, term contracts, and we're running out of this stuff. It's not kind of playing out like, I'm not saying it won't, it's not right. I think the demand is there, but it's not playing out in the time frame we thought. It's not playing out like we thought, and there seem to be multiple new drivers affecting its ability to kind of get going again. So again, how do you kind of read the landscape at the moment? It's confusing.
Well, I think this near term certainly is going to be tough. I think the coming months are going to be difficult, just in that sense of uncertainty. There's no doubt that fuel buyers are in a bit of paralysis, or they're sitting on their hands. They're waiting for clarity on tariffs. They're waiting for clarity on Ukraine and Russia, and if sanctions are lifted against Russia. And one needs to bear in mind that utilities normally have a buffer of inventory, so they can afford to sort of stand back for a period of time and just let the dust settle before re-entering the market. And that's effectively what we're seeing. So there's sometimes a misconception in the market of the industry by investors. They think, inventories are being drawn down, and they are, but it's normally, there's always a baseload of inventory that a utility will have, because you can't switch a nuclear power plant on and off. So whether it's 1 year or 2 year, they'll just keep, if it gets to 2 years, they top up again. So utilities can't afford these market shocks. They sit back, they wait for the dust to settle, and then they take a strategic move. At some point, they have to come back into the market to buy new supply. So, I'm hoping it's a very short period. The industry analysts such as TradeTech, UXC are sort of pointing towards being okay by the second calendar half of this year. But yeah, the next few months are going to be a bit tricky until that uncertainty resolves. The big talk in the room, as you've mentioned, is how is the Sprott Commodity Trust going to meet its cash flow funding, and we're also looking at, as mentioned, like UEC selling strategic inventory, that those pounds being released onto the market, how will that be managed? Or is there another way through debt or equity or capital raisings they can pull themselves out of that cash flow deficit? So very, very interesting times. And I think, cool heads prevail. Our contract strategy, we're okay for these next 6 months. I think we'll certainly outperform the spot price, but yeah, we do want the price to increase clearly, and in the short term. But yeah, I'm circumspect. The reality is right now, the market's just, the fuel buyers are stepping back and the investors are stepping back.
It seems to, and we haven't even talked about decommissioning of warheads and START treaties, etc. So there's a lot of confusion out there in the market. But I think for guys like you, producers who've proven technically that they can produce in a meaningful quantity. I need to add that bit in because that's the important bit. And obviously you're with Alta Mesa, and I think now with Laramide, it's building up something quite nice and inserting yourselves as one of the kind of meaningful players in the market for sure. Well, just finish up. Remind us what we can expect to see from you this year. What are investors look forward to?
Yeah, sure. So I think immediate term, we'll come out with our third quarter, our March quarter results in April, and I really look forward to that. We're trying to better what the previous owners had achieved during their historic ownership of the mine. We're also, by June of this year, we'll hit our guidance, the 850,000 pounds, showing that the technology works, that ion exchange in our new lixiviant that we leach the uranium works, and also our management of costs, our C1 costs, and in the June quarter, we'll announce our all-in sustaining costs. So I think it's really now becomes a bit more financial based and looking also at our sales mix and contracts that, now we are operating and we're held to account by what we can produce. And, the pressure's on too. Ramping up's not easy, but I believe that we're off to a good start. So rest of the year, in terms of M&A, we're just to emphasise, we've been strategic. We haven't taken over companies and we're enforcing ourselves. We've been really strategic about it, and focus right now is Honeymoon's ramp up, but it is going well and affording us an opportunity to start looking what else is out there.